Good evening, folks. This is Andy Pedraza with Special Effects Academy, and we're on the start of the week session for March 1st of 2020. As usual, we'll go through our standard agenda. We're going to be looking at the results of the prior week, a peek at the currency strength meter for the past 7 and 30 days, our calendar of fundamental announcements for this upcoming week, a look at the major pairs on the daily charts, any setups we see in progress, and a few words in conclusion. Starting at there has been no change to the long-term ledger. We're all cash now. We haven't made any trades in a while. We will be looking at opportunities as this current market at this point. At some point, it will bottom out, and this is going to give us great opportunities for long-term trades towards a recovery. But that's neither here nor there. Right now, we are sitting out the situation and waiting for something to pop. Have our best week day in quite a while. We're up about I'm gonna say 12% from last week, and most of those gains were actually accomplished on Friday. That was, as I said, our biggest gain in a single day. The account is up about 55% on realized gains right now for the fiscal year, which, as a reminder, our fiscal year goes from April to March. So we have 1 month this month remaining to end our fiscal year. So we've had quite a good run, especially this year. January, February were so just to keep trying to do the same. The score, you see the trades that did open this past week, quite a lot of trades. So we definitely took advantage of the situation as best we could. There are only a few losers in all those trades, and of course the winners far outweighed the losses throughout the week. And we did open 4 trades towards the end of the week to see if we could catch some of the bounces. Things possible at this point. I think the market overextended itself last week. It could, of course, keep going in the same direction, but I think there probably will be some sort of retracement before all is said and done. I did open 2 new trades, going long on the Aussie JPY at market open today on the short term and on the intermediate term account. So those trades will be starting out the week. They're currently a little bit negative. Again, after the yen did such a massive movement on Friday. And last but not least, also nicely up for the week, a 5% gain, almost 5% for this week that just ended. We only took 4 trades, but we made the most of them, and all of them actually turned out to be winners this week, which is rare, but certainly welcome. As I said, I put up in the Aussie JPY long to try and take advantage of a bounce. So we've got that trade to start out the week. That'll be reported in the next update to come out. Opportunities for improvement. Well, February went out with a bang. As I said, it's probably the best month we've had in quite a while. I think 1 month last year may have exceeded February, but we did have gains in February in excess of 20%. For the month. So that was an absolutely fantastic result. Friday, as I said, gave double-digit gains in a single day. This was one of those rare but welcome perfect storms. The advantage of the Forex market is our ability to go long or short as the case may be, which means that when the markets are collapsing and everybody on the investment side is losing money hand over fist, we're actually picking up that money. We don't care which way the market moves. And of course, the reason everything is going crazy right now is the coronavirus. It is sending shockwaves through the markets, and that is expected to continue. I do think that the market overreacted last week, so there's probably going to be a little bit of a pullback, but that's not set in stone. The market could continue collapsing. So we'll have to play that very carefully and see what we can pick up from it. Volatility, of course, is sky high. We'll see that in the next slide. And as April 20th, 30th, and May 1st of this year in Wilkes-Barre, Pennsylvania. Details on the website and in your emails. meter for the last 30 days and the last week. As we can see, the volatility remains quite high for the monthly. It's at 8%. Quite surprisingly, silver was a loser for the month, and quite a heavy loser. That 8% is mostly on silver, whereas gold actually managed to pick up some nice gains. On the monthly, we don't see a lot of heavy movement on the currencies, with some notable exceptions. The Kiwi and the pound, of course, suffered significant losses throughout the month. And of course, the yen picked up quite a bit. The rest of the currencies were pretty much bouncing up and down. If we go to the weekly, however, we can see that the volatility came in at 12.60%. 1 week did more movement than the entire month before it. So that is quite a significant event. The metals suffered, so silver and gold both lost ground last week, with silver being the clear loser. On the currencies, the Aussie lost. I think that was really the main losers were the Aussie and the Kiwi. So the Aussie and the Kiwi lost quite a lot. CAD probably the next one as a loser. It was only outpaced by the Kiwi and the Australian. Then we had quite some nice recoveries from the Swiss, the Euro, the pound to some degree, and of course the yen was the absolute leader as it became the safe haven currency of choice as the rest of the market collapsed. The dollar didn't do too poorly. It did lose ground this past week against the yen, the euro, and the Swiss, still on to gains against the other currencies. And again, the volatility was incredible for the week. I haven't seen double-digit volatility on a weekly, I think, in at least in the past year. On the monthly, certainly we've topped 10%, but weekly, that is quite a significant event. Fundamental. This week coming up, you've got quite a big calendar in between interest rate decisions out of the U.S. and Canada. So tomorrow we'll be starting with the interest rate decision out of Australia, which promises to be very interesting. There is no expectation of a change, but with the situation Australia is undergoing, that may change. We may have a surprise decision tomorrow night. So we're going to be trading that one live. On Wednesday, we have the interest rate decision out of Canada. Also, no changes. Then the labor reports on Friday, the non-farm payrolls out of the U.S. and the Canadian numbers coming out at the same time Friday morning. So these four events will be traded live. So you will see the invitations, or rather the schedule, in your email later today. With starting with oil, this has been a complete collapse. The prior floor was at the 50-50. It dropped to more than $5, making a new low on the daily chart. We can find lower if we go backwards beyond the visible portion of the chart. But this collapse of the floor on oil is quite telling. Obviously, that's going to impact the Canadian dollar, since it is somewhat linked to oil. I'm not sure that oil is going to stay down there, but this also is going to give us some really good opportunities for some recovery gains. Not options and commodities as well. So I may take some trades on oil, but that will not be visible here on the Forex side of the house. But if you guys trade either options or commodities, I think this is a pretty good opportunity for some quick and easy gains. Moving on, euro dollar, the euro staged last week against the dollar. The thing with the coronavirus is that it is the economy out there, but we are in a, I guess, in a fear cycle. Depending what's on the news, people are going to be afraid of the euro, they're going to be afraid of the dollar, they're going to be afraid of the yen, or vice versa. They're going to be happy with these currencies, and that's going to impact some very nice short-term movements as this plays out. The euro was already in a quite a weakened position, so it was almost This one was much shorter than even I expected. It's not all the way back to the top, however, and it could turn around at any point. So there's a lot of these charts that we're going to be keeping an eye on, not necessarily jumping into trades immediately, but waiting for a good opportunity to trade them in either direction. The euro dollar is the perfect example of that. Pound dollar, so the pound drops somewhat nicely against the dollar. And again, this is there's no Brexit anymore. So this is the thing: the coronavirus has eclipsed everything else that was affecting the market before. So none of this is due to Brexit. It's all coronavirus fears, and we saw the pound dropping quite nicely, especially Friday. Friday was a very heavy movement day for quite a lot of currencies. So we did have the pound dollar breaking support at the 128 and then promptly popping back up. So this what direction the week takes as it begins to see where we're going to trade it. I do want to get back into the pound. We're already in the euro pound. That's the only one I opened last week. We're long on euro pound, but all of these pound pairs are likely going to be giving us some good movement. So keeping an eye on that. And especially in picked up quite a significant percentage gains against pretty much every other currency out there, including the dollar. This is one of the trades I opened on Friday to go long on this pair, expecting that it would retrace somewhat, at least back to that trend line, which should give us some pretty quick gains. So we'll see how that pans out. Right now, the trade is almost exactly at break even, and we're waiting really for the week to kick into gear. USD Canadian, for the dollar, this is Canadian weakness. And that Canadian weakness can mostly be attributed to the plummeting oil price. But of course, the coronavirus fears are also weighing heavily on the market. So to some degree, the dollar became a safe haven currency just as much as the yen did. So we can see that play out here. Again, when we're at the extremes of the chart, I'm looking more for an opportunity of a either way. So another one that's going to be under observation to see what we can pick up. US the chart, some nice hits on this one, and this is yet another of those trades that I went in contrarian on Friday, going long when it hit the bottom. So again, have to see if that bottom holds. If it does hold, then we're probably in for some quick gains this week as USD Swiss goes back to the next level of support up there, top of the channel at the 98 and a half. So we'll see how that plays out. If it does break the bottom, I'm probably going to be exiting that trade early. It's all about controlling risk and admitting you're wrong as quickly as possible, so you're not caught in excessive losses. So I'm going to be monitoring the charts very anything. The gets complete yet again. So this is the second bottom break. It's making a lower low as we speak. Not too sure where it's going. The Australian economy, of course, is in trouble. Tomorrow we have the interest rate decision, so that has to be taken into account as well. But yet another chart that's overextended and might give us an opportunity for a retrace for in coming weeks. We'll have to see which way it moves. Kiwi dollar, same thing, hit chart, and is now in a position where we're either looking for a complete breakout where it just doesn't have a bottom anymore, it keeps going, or we might be looking at a potential retrace to test the earlier levels of resistance. So we'll see which way the week starts moving on this pair as well. All the rebase quite a nice profit of the CAD as it dropped and our trailing stop kicked in. And most of these I'm going to be looking for opportunities for re-entry depending which way the week kicks off. One of the more players right now has been caught in a a sideways pattern for a few weeks now. It did break the bottom on Friday, as pretty much every pair made. But in this case, it popped right back up and ended the week in the middle of the channel yet again. So until it does break out in either direction, this is not going to be top of our radar. Euro pound enter long on the resistance break that happened on Friday. So we'll see how that trade treats us. That's on the intermediate term account. I am trying to trade it all the way to the top, to the 93 on euro recovery in weakness. So this one may suddenly wake up after being pretty quiet for months at a time. Euro JPY, again, I that some of these are going to have to retrace. Even if ultimately they continue heading down, I think there has to be a little bit of a retrace, a little bit of a correction before any further movement. So at this point on the intermediate, I'm not so much trying to pick something as boost in and out trades on retracements, and then we can figure out what the longer term direction is going to be. Euro Canadian, what Canadian collapsed, we've already covered that and why. So it went all the way back up to almost the next to last level of resistance, bounced off of that and went more than halfway back down. All of these Canadian pairs are very likely going to give us opportunity once a correction establishes itself. So another one under close observation. And on Friday as well after that, in my opinion, excessive drop. So I don't think it can keep going, but we'll see what happens. I am trying to trade it back up to the resistance at the 141.25. So that's a little bit under 200 pips that we're looking to capture there. So to see later on in the week that. Aussie JPY was our biggest gain last week. We took in excess of 300 pips, I think, on this most recent movement. You can see that that's probably the longest candle you're going to see in the charts. It just broke every level of support and kept going, only recovering towards the end of the day. And it did take us out at profit when it really. So another one that might give us opportunities for trading really in either direction. It's very stressed. It could keep going down, but there's an equal chance that it's going to go back up to test some of the resistance levels. Either way, we're going to try to catch that when it does start moving. Euro New Zealand, all the chart as the Kiwi completely collapsed, and the euro, of course, was regaining some strength, especially the last couple of days of the week. So it is at a limit right now. I don't think, and this is not about what I think, but I do have to have an opinion. I don't think it's going to keep going. So I'll be looking for opportunities to trade it back down. I'm not going to jump into any trades. So I'm going to wait to see what happens, which is the best position you can take is wait for the movement and then jump on it. Good possibility that it's going to drop at least 300 pips back to the middle level of support. So we'll keep an eye on this one as well. Pound Canadian, another mostly boring pair. We can see that the CAD didn't weaken against the pound as much as it did against other currencies. That's because the pound was weakening at the same time. So it is still trapped in a sideways range, and until it breaks out, we're going to be leaving that alone. Down. This is probably a trade that is going to be worth taking if the direction does continue as the week begins. So this is the last chart and also the last one we're going to be closely observing as the week kicks off for guidance as to what we should do. And this is a bit of a joke, but it's a bit serious. I replaced everything in the chart with coronavirus. That's the only thing you should be concerned about in the market right now. The market is in a completely reactive mode. Everything is surrounding the coronavirus. Brexit doesn't matter. The U.S. election doesn't matter. Australia going up in flames, doesn't matter. Nothing matters other than what the news is going to say about the coronavirus, and that is how you should treat trading for this week and maybe weeks to come. Fundamentals, other than the coronavirus, are going to take a huge step back, and the technicals, your support, your resistance, this, that, and the other, are also going to be taking the back seat. It's whatever is happening around the coronavirus that's going to be moving the market until further notice, and I'll let you know when that happens. And wrap up a few parting words, and I always come back to the Pareto principle, and that states that 80% of X that's replaceable comes from 20% of Y. Applied to trading, that usually means that 80% of my profits come from 20% of my trades. The problem is I don't know beforehand which 20% of my trades are going to be responsible for the gains. Last week and Friday specifically, it was a perfect storm. Everything worked out the way it should. We were on the right side of the trades. We made a chunk of profit. While 90% of the investors out there were running around like headless chickens, we were making double-digit profits. This is why when it comes to the financial markets, I personally am never an investor. I invest in other things, but not in the financial markets. In the markets, I'm always a trader. There's no buying and holding for me when it comes to anything in the markets. But what about Pareto? I guess my takeaway here is that if we had just gone fishing on Friday or otherwise taken the day off, there would not have been any double-digit profits. You got to be in the market all the time in order to catch these big movements. So if 20% of your trades are responsible for 80% of your profit, and you miss that 20% of your trades, it might cost you your year of profit. So take that into account. You should always be in the market in some fashion, or if you can't be there, well, that's why we have a copy trader. I'm always there, so I'll be happy to be trading for you guys. So that is going to be the end of this presentation. As been adding this chart for probably since the beginning of the year, and that is a honest and sincere request for feedback. How can we do more to help other people, bring more people in that are going to be able to take advantage of what we're doing? Send suggestions to me via email, and I'll be happy to take them into consideration. And that is the end of this session. Any comments or questions from anyone? Okay, thank you very much. There will be a recording posted on YouTube very shortly of this session. And of course, if you have any comments or questions, do feel free to email me. Have a great rest of the weekend and talk to you guys tomorrow.